Hi Sunil, welcome to the show. How are you?
Thank you. I'm fine. Thank you for having me on this.
Thank you for your time, Sunil. Sunil, what's the outlook for the markets?
As you see, I think the markets are quite flat and prices are not moving very aggressively these days. Dollar terms, we are seeing gold is stabilizing around $1,800 and the silver is kind of stagnant around 24-ish kind of dollar. In rupee term, we are seeing gold trading close to around 49,300 now. I believe, there are mixed cues at the moment. One front, we are seeing dollar is weakening, consistently. And on the other front, there is on the COVID vaccine, being distributed at ground level. So equity markets are taking cues from this positive news. And obviously, investors' risk appetite is actually kind of driving them towards the equity market. And obviously, that is putting pressure on gold prices. But the December month is now kind of sluggish period for commodities, considering the kind of festivity of Christmas or be it the New Year Eve. A lot of investors do get out of the market, and that obviously the volatility that we normally saw in the past couple of months. But I do believe that the long-term fundamentals for gold and silver are still positive. Because anytime soon we are not expecting Fed to increase the interest rates. Anyhow, they have already communicated that recovery from COVID, damage is going to take a good amount of time. And that will obviously support the gold prices as we move ahead. Maybe down the line 1 year, we can again see gold prices making new highs. But at the moment, I think with the stimulus package on the card, and I don't think so they're going to plan for a fresh stimulus package beyond the $900 billion that they have already mentioned. It should keep the prices in a range. Technically, I believe till the time gold doesn't cross $1,900 market COMEX, we may see some downside pressure because of the aggressive increment that we are seeing in equity markets. So, in a month's time, I believe gold prices may kind of stay near 48,000 rupees per 10 gram domestically, and internationally, $1,800 is what I'm expecting to stabilize around that level to start with. And maybe later stage, next year, maybe January or February onwards, March onwards, we may see some decent bounce back in gold prices. And then again, I think gold will see a to $2,100 mark kind of. From that perspective, we can see even Indian markets surpass the recent highs of 56,200 for gold, and possibly even silver may surpass 78,000 rupees per kg as we move ahead.
So in a rupee term, sir, can you please share the support level for both gold and silver?
For 1 month perspective, I believe 48,000 is the support. So one can sell around 49,500 with a target of 48,000 rupees. With a stop loss of 50,000 rupees in rupee term. So 50,000 is the resistance. 49,500 can be a good level to enter on a short side. 48,000 level can be a target for a month's perspective. And if you talk about a yearly perspective, 1 year perspective, I believe 48,000 rupees is a decent entry level. You can target again a price of 56,000 rupees in a year's time. So that is something which we can take from 1 year perspective. For silver, I think 1 month perspective, 60,000 can be a decent selling level. We can again see prices close to 60,000 rupees a kg, and one can maintain a surplus of 66,500 in a short span of 1 month's time. And positionally, again, I'm bullish on silver as well. For a 1 year period, I think 60,000 per kg can be a decent entry level. Again, we can touch 78,000 to 80,000 rupees a kg in 1 year timeline for silver as well.
What about metals, Sunil?
I think most of the base metals have kind of reached their multi-year high. Copper, we have seen copper trading close to its 7-year high. Obviously, the physical demand for copper is good. China is importing a lot of infrastructure projects. And overall, if we see, there is expectation of 72,000 tons deficit versus a surplus that was expected or predicted before of 280,000 tons. So this year, I think overall globally we will have a shortfall of copper in physical market, and that is driving the prices up. On the other hand, even the other metal like zinc is kind of seeing a decent demand from galvanizing industry. Eurozone demand is kind of picking up for zinc because of the COVID vaccine news, and even hopes over the stimulus package is kind of driving all the base metal prices up, be it copper or even natural this nickel or even zinc for that matter. But I believe most of the fundamentals have kind of digested in the current price that we see. There is a possibility of a decent correction, maybe a correction of 10% from here can be expected. So I believe 600 rupees is what copper is trading at the moment on MCX. Zinc is trading close to 220. I believe copper may touch 580 levels in another 10-15 days time on a profit booking note, and even zinc may possibly come back to 200 levels from 220 levels currently. So overall, buying on dip can be a strategy, but at the moment, very short-term view, 1 week, I can say sell at 600 for copper, target 580, stop loss 610. Zinc can be sold for 10 days time period, target to 200, and stop loss will be 228. But down the line, if you talk about the future contracts, 6 months down the line, copper may again bounce back from 580 level to maybe 620 level with the kind of overall shortfall that we are seeing in the physical market, and with the positivity of vaccine on the cards, with the positivity or optimism over the stimulus packages, overall base metals may possibly find more steam to go up again once they kind of see a small profit booking kind of. So the profit bookings can be seen as a decent buying opportunity with 2 or 3 months time frame.
Finally, our last question on the commodity side is energy segment. Sir, what is your view?
Okay, crude oil is quite volatile these days. Now WTI is trading close to $47, and Brent is trading close to $50 mark. We were actually not expecting the prices to jump to $50 mark so quickly. But with the fastened approach on vaccine distribution has actually fueled confident in investors' mind that the demand recovery in crude oil may happen sooner than expected. Even OPEC front, 500,000 barrel kind of production was increased actually. We were expecting that obviously it may have some impact on the prices, some pressure can be seen on prices, but the positivity on vaccine and the positivity on account of the stimulus packages is kind of weighing on the prices to kind of support the prices that we are seeing. I believe even though the vaccine is being distributed, there is abundance of supply. US is still producing 10.9 million barrels per day, which is just 2.2 million barrels less than its all-time high. Even OPEC, as I mentioned, 500,000 barrel production on a daily basis has been ramped up. So supply will not be a constraint. The prices at current level have discounted the fundamentals that we had seen out of the stimulus package and some demand recovery due to the COVID vaccine. But I believe it will see some pressure going forward. It can be used as a selling opportunity. I can say that 3,500 can be a decent selling range for crude oil in domestic market. We can again see prices close to 3,300, and we can maintain a stop loss of 3,600 there. Natural gas, on the other hand, has corrected because of increased supply, and US, the weather report or weather forecast has kind of suggested warmer than normal weather expectation for the next couple of weeks time. That's why the prices have corrected and is trading close to 196 at the moment. But I believe the winter demand is going to pick up, and over a period of time again we may see 220 levels in natural gas. So natural gas can be bought around 195 with a stop loss of 189, and one can again see 210 and 220 as a target in a month's time.
Pleasure talking to you, sir.
Same here. Thank you very much.
Thank you for your time, sir.
Thank you. Bye-bye.